Okay, guys, here we are on Work Together 11-2, and we're going to be looking at some more returns for merchandise returned transactions that are going to go in the general journal. So the first thing we're coming to is granted credit to Keller Associates for merchandise returned. So in this case, this is a sale that we made that returned their stuff to us, and we charged them tax for it. So we're going to have to return their purchase price plus the tax for the whole total. So the three accounts that are going to come into play here, and this was on account, are on June the 4th, sales, returns, and allowances. Document number CM28. Okay. And the return was $245. Okay. That's our first debit. The second debit is going to be sales tax payable. Because that is sales tax that we're not going to have to pay because we're actually returning the money to the customer. And then the last one is accounts receivable / Keller Associates. And that's going to be for the entire amount, which is $259.70. Okay? All right, let's move on to the next transaction, which is June the 9th. On June 9th, we learned that a sale on account to Ashton and Lindsay LLP was incorrectly charged to the account of Abraham Corporation in the amount of $623. Okay, if you'll recall, the way we attacked this before was we thought about who it went to and how we were going to correct it, because and in this one, the sale on account to Ashton was incorrectly charged to the account of Abraham Corporation. Okay, so if we debited Abraham Corporation for would be an accounts receivable, that we've got to do the exact opposite, which would mean to credit them. Okay, and we don't have to say accounts payable here because it's not going to affect your accounts payable account. Okay, all we're doing is moving it from Abraham Corporation to Lindsay Corporation, because that's where it was supposed to go. So we know it was supposed to be a accounts receivable, which is a debit, to Okay, I see what the problem is here. It's Ashton. Why do they make these names so hard to do? ASHSTON and LLP. There's a credit memo. Here's memo 61. $623. And the credit is going to be to Abraham, because that we have to get it out of them, because they didn't buy anything. So that's how that one goes. All right, moving on to the 12th. Granted credit to Lambert Schools for damaged merchandise, $206, no sales tax. Remember, the school systems, they weren't paying taxes because they're tax exempt. So sales returns and allowance. That was CM29. And the amount is $206. There's no viruses, thank goodness. Accounts receivable. Lambert Schools, $206. And our last account, our last entry is on the 26th. Found a sale and account to Keller Associates, which was incorrectly charged to the account of Carson Property. So we're going to do the same thing as we did a minute ago. Found a sale and account to Keller. So it was supposed to be to Keller Associates. Memo 62 for $598. And it was incorrectly charged to Carson Properties. So that moves it over to where it's supposed to be. All right. Grade this step. All right, everything's good here. I'm not going to go through all the posting with you this time. I think you've got this. Just don't forget, when you go to post the one that has the slash in it, you have to do it to accounts receivable and to Keller Associates. You have to do it to both of them. All right, so I'm going to wrap this up. And if you have any questions, send me an email. That's 11-2.